So it is true that there aren't enough of us around, but I'm not sure it's true that there is no activity. There are other of my colleagues, be it Axel, be it Seed Fund, be it Inventors, DFJ has done quite a few. All of us have done, I think, to some extent. In terms of focus, we are focused only on that.
I think the magnitude is important, right? So just as a template of a more mature market, US has got about a 1:1 on angel versus venture, right? I think if you just compare that mix, I think we're far smaller.
Yeah.
So
it's true.
There are obviously players in the market, but does it add up? I don't know.
It doesn't add up, right? Classically, we look at it as an inverted pyramid,
Right.
meaning there's far more number of firms and funds in the later stages, in proportion to early stage. So in a sense, that's good for OJs, not very good for the entrepreneurs, because the market is far larger for us to tackle.
Yeah, so I think the other way to slice this is, there are a lot of people who make individual investments. You may not kind of look at them from a structured angel investments perspective. If you go into any private equity firm today, that's got 40-50 crores of revenue, they've been funded either by family or friends.
Yeah.
You consider those also as angel investments.
Right.
But if you were to look at classical, either Silicon Valley style or Israel style of organized angel networks, I think there's a humongous opportunity in India, and that's definitely the pain.
Okay.
But from a DFJ viewpoint, all but kind of one of our investments, all of them were the first money into the company. So you also, as I think, venture capital fund, you need to do kind of portfolio management. We're changing, for lack of a better word, we're helping these companies change their diapers. Some point in time, we need some toddlers, and we need, some more who know how to feed themselves, right? And so it becomes a bandwidth issue. But that said, I think we're still very actively looking at early stage companies.
Okay.
The hard part is early stage, though, I guess. I think most of us are at different stages of either realizing it or accepting it or preparing for it. Is none of us know what's the time period between investment and exit on early stage. That's the big issue here, right? So, is that 6-7 years that we can tolerate, or is that 10 years which none of us can tolerate, because our fund models are all basically the same, right? I think that's the big uncertainty. So it's not just portfolio balancing, it's also risk.
To paraphrase that another way, companies don't grow quickly in India in their early days. So the time it takes to get to 5 or 10 million so that it becomes a real business is often so long, to your point, that you don't have enough visibility, at a very early stage. It may never get there, or it may take, too long to get there. So I think the challenge everybody faces is, like he's saying, to balance and have a mix.
See, when I look at companies and I'm advising entrepreneurs, so I tell them that you have a very interesting technology, a very good solution, but what is the problem that you're solving? Right? The problem that we are solving in India is a very different one. So if we take a model that has worked elsewhere and kind of say this is what we're going to do, because the mandates of the several funds that we have is very similar. What we are told the LPs and what we can do in terms of investments is very similar. So even if you do a little bit of an outreach, how many more companies can you go and do at 750K, at 250K? Not many. So indeed, I'm sure a lot of VCs now, several of us have been entrepreneurs. So we will adapt to the the new environment. But are we adapting fast enough, and are we able to find the opportunities that we can create for ourselves, a deal flow that excites us, excites our investors?
Sure.
That's a big question.
Yeah.
Sorry.
Yeah. So the other thing is, I think for funds that are reasonably large in size and are doing investments, stage agnostic kind of investments, the biggest challenge is the partner, who is very passionate about that particular startup. He or she, they're going to stick their neck out and say, what, I love this, and I want to back this. And so it's really not about, market opportunity, competition, differentiation, positioning, go to market. All that is fine. I think you do all that math, but it's just the instinct. You sit across a table and you say, what, I love this entrepreneur. I'm going to bet everything, and I'm going to go to my partnership and say, I love it, I'm going to do it. So, and you fight. I mean, or you put up a case saying that this is the reason why we need to do this deal, and and I'm going to go do this deal. So that's the biggest challenge. How many such cases can you back? Unless, for an angel fund, absolutely that's your focus. But for a large fund, will you have passion, same passion, for many startups that you come across?
Have you had a different experience at GVFL?
Yeah, GVFL basically we will be investing only in startups. Our experience has been that the revenue models which we first saw at the time of investment would no longer exist 2 or 3 years down the line. I know it's pretty funny, but that is true that things are changing so dynamically. We can't blame the entrepreneurs also per se. So we need to take their toll, and then the whole exit scenario becomes completely baffled. And the kind of returns we envisage at the beginning of investment and what you said then are totally mismatching. And we also see that most of the entrepreneurs, like he said, are passionate and they don't understand. Most of them are very good at technology part, but monetization part is what we find it very difficult. They think that they have a path-breaking technology, and they think that we are at fault of not seeing the money part of it, but they themselves are at fault. And most of the companies are family-driven companies, and for them to inculcate this venture capital into them, there is a mindset problem with them also.
I'll also give a different flip to the problem, that I think not only angel, how many Series A or B investors do we have in India? Like, if you count, Series B investors, there are like 10 to 15 of them, that's it. So, the point of inverted pyramid is like, till Series B you have very limited, and then suddenly everybody is private equity. Right? So, it's not just the angel investors which are lacking actually.
It's a team, not
it's a team. So, when we some of our companies, when they went for Series B, there is very limited list in India.
Yeah. No, I think it's also a question of market dynamics and the IPO windows and the M&A activity. I mean, if you look at, 96, 98, we're all together in Valley, lots of private equity guys would become venture capital investors. It was the other way around, absolutely. Right? So completely, they became VCs because they wanted to get in early. Whether it's an investment bank, whether it's
hedge fund,
a buyout fund, hedge fund, they were doing venture investments because attractive companies, attractive valuations, I can flip it in 2 years and make kind of better multiples than my 3 or 4x. Yeah.
So tell me something. I mean, so you need, like Ravi was saying, you need a base of about 100, 200 angel investors or angel investor networks, and then on top of that, you need your 20 VCs, Series A, Series B, and so on. What's missing now is that angel investor base. Alok, Kenan is doing something.
We haven't figured out what we're doing. We're trying to figure out what we want to do. But see, again, I want to come back to the magnitude of the issue, right? We are doing what, I know we've gone up and down, but we're doing roughly $500 million of venture capital in a year, right? Give or take. If you're doing
India,
that...
in India.
Yeah. We went up to $1 billion, and now we are probably at 300 million. Somewhere there is the midpoint. If you want to, let me give you the numbers for the Indian Angel Network. We've done 18 deals in the last 2.5 years, amounting to 13 crore rupees. Okay, that's less than $3 million by a network of 80 angel investors. Okay. If you want to do $500 million of angel investing, you want something like 10,000 angel investors, right? Not impossible, but that's the magnitude. Right. Today we are toying with 1,000. Okay, so there is a 1:10 multiplication that needs to happen. Right. And I think a lot of this multiplication has to do with evangelizing, showcasing successes. I know Mumbai, there's no one here, right? M-Coach happened, and certainly the whole group was energized, right? Because one success, creates 40 followers. Right. So I think that is what needs to happen here. It is a 10x. I think the magnitude of the problem is very clear. So, if you want to count it in terms of angel networks, you need more than 100 angel networks of similar size, right? But the fact is, a lot of it will continue to happen with individual angel investors. So there is not just a need to create angel networks, but also celebrate angel investment so that individuals feel comfortable saying, I'll make a 25 lakh bet.